Welcome to Smart Stock Watch. Today is May 9th, 2025, and we're diving into the latest earnings report from Construction Partners, a leading civil infrastructure company operating throughout the Sun Belt. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Construction Partners has just released their fiscal 2025 second quarter results, and there's a lot to unpack, from significant revenue growth to a record project backlog.
Revenue and profitability overview. Let's start with the top line. Construction Partners reported a revenue of $571.7 million for Q2 2025, marking a 54% increase compared to the same quarter last year. John, what are the key drivers behind this impressive growth?
The revenue surge is primarily driven by acquisitions, which contributed $173.1 million, and organic growth in existing markets, adding another $27.2 million. This mix of organic and acquisition-driven growth highlights the company's strategic expansion efforts.
And what about profitability? How did they perform on that front?
Net income came in at $4.2 million, translating to an adjusted EPS of 0.08 cents, which is a significant turnaround from a net loss of $1.1 million in the same quarter last year. This improvement is a testament to their effective cost management and operational efficiencies.
Operational efficiencies and future outlook. John, the company also reported a 135% increase in Adjusted EBITDA to $69.3 million. What does this tell us about their operational performance?
This substantial increase in Adjusted EBITDA, along with a margin expansion to 12.1%, indicates that Construction Partners is not only growing, but doing so efficiently. Their ability to manage costs and integrate acquisitions effectively is driving these results.
They've also raised their fiscal 2025 outlook. What can investors expect moving forward?
With a record backlog of $2.84 billion and strong demand for infrastructure projects, the company is well positioned for continued growth. They've raised their revenue and net income guidance, reflecting confidence in their strategic initiatives and market conditions.
Strategic acquisitions and market expansion. Construction Partners recently acquired PRI in Tennessee, adding nearly 300 employees. How does this acquisition fit into their overall strategy?
The acquisition of PRI is a strategic move to expand their footprint in Tennessee, a state with robust growth opportunities. This aligns with their strategy of acquiring companies with strong leadership and market presence, enhancing their capacity to win and execute projects.
What impact do you foresee from this acquisition?
With PRI's experienced management team and established operations, Construction Partners is poised to capitalize on Tennessee's economic growth and infrastructure funding, further solidifying their market position in the Sun Belt.
CEO and leadership insights. Fred J. Smith, the CEO, emphasized the company's operational performance and strategic focus. What insights did he provide about their future direction?
Smith highlighted the company's outstanding performance despite seasonal challenges and their strategic focus on long-term value creation. He pointed out the healthy project funding and growth in the Sun Belt, which are key drivers for their continued success.
How does the leadership view the current market conditions?
They see strong demand for infrastructure projects, both public and commercial, across their markets. This, combined with their strategic acquisitions and operational efficiencies, positions them well for sustained growth.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 9 to 4 cents, but Construction Partners reported an actual EPS. How significant is this beat?
This is a substantial beat, exceeding expectations by a wide margin. It reflects the company's strong operational execution and ability to leverage acquisitions effectively, which has clearly surprised the market positively.
What does this mean for investor sentiment?
Such a significant beat on EPS is likely to boost investor confidence, as it demonstrates the company's capability to deliver beyond expectations, potentially leading to positive market reactions.
Key takeaways. In summary, Construction Partners has delivered a strong performance in Q2 2025 with impressive revenue growth, a significant EPS beat, and a record project backlog. John, any final thoughts on their investment prospects?
With their strategic acquisitions, operational efficiencies, and raised outlook, Construction Partners is well positioned for continued growth. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Construction Partners' performance in the comments below.